Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, where you live on the Gulf Coast, did any hurricanes hit you? Because they seem to be rolling in now on a regular basis.
No, so far so good this year. We had a tropical depression. I don't even remember when it was. You know, it's funny. You kind of get used to it, and unless it's something major, you don't pay a whole lot of attention to it. But we had a tropical depression. I don't know, probably. I don't know, back in late summer, and that was no big deal. Now, there was one that hit New Orleans, and I forgot the name of it already. Hurricane Ida,
yeah.
Wasn't it? Yeah. And listen, they recorded, it destroyed some of the communities just to the south and west of New Orleans, and my nephew sent me some data. He works offshore. They recorded winds at 223 miles an hour. 223 miles an hour. It destroyed some of those oil field cities down in South Louisiana.
And that's why oil production and petroleum products are now in short supply, isn't it? The Gulf Coast rigs had to shut down, or they're not supplying oil yet, and all of the refineries were shut down. Now, you're tucked between Pensacola and Mobile, right?
Yeah, and we were good here. You know, we got hit last year, but whenever these little tropical depressions come in, you know, it's like I said, you don't pay much attention anymore. But yes, Sally hit us last year, but so far this year, we're good. You know, you talk about the hurricanes coming in. I got a friend lives in New Orleans, and you know, he's lived there all of his life, and he said he's done. He said he's retired now. And he said he's moving. He said, I'm selling the house. I'm out of here. I'm done with it. I have family over in, you know, a little bit further in West Louisiana and Southwest Louisiana, and they got hit twice last year, back to back. So, you know, the Gulf Coast has been getting hammered with these storms.
Oh, wow. Let's see here. For all of our Canadian listeners, too, who may not be familiar with 223 miles per hour is, that equals 358 kilometers per hour. That's hustling, man. If you were a jet, you could just sit on the ground, and that wind speed is enough to take you off and get you up to 40,000 feet.
Oh my God, it's crazy. It's the damage when you look at it. You know, when something doesn't affect you, it's like being where I'm at, you see the pictures of the fires and you go, oh, that's bad, and I'm not trying to make something more of it than it is. I mean, it is what it is, but, you know, when it doesn't affect you, you just tend to, you know, look at it and ho-hum and go on your way. But yeah, I mean, it's pretty devastating when you see it.
Mm-hmm. And, we're being told now there could be a tire shortage as people in the northern part of North America have to switch from summer to winter tires, and they're being told stock up now. And I'm sure, again, our tires are probably all made in Asia, so it takes a while for them to get here, and there's a shipping container shortage and all kinds of squeezes taking place. So along with computer chips, garden gnomes, sex toys in Europe apparently were in short supply because of that canal stuck ship. I mean, just everything is being affected right now. So certain commodities going up and down rapidly. But what we'd like to talk about is, the up and down in the Dow recently. It dropped 5%, and then it's bounced back, the same amount, and all the stock market boards are green today. Was that 5% dip enough to satisfy people who thought there would be a correction this fall, or are we looking at something bigger?
Well, ideally, that was not enough, and we should be looking at something bigger. It is certainly one heck of a rally today, and the mania is certainly still alive. But with that said, there are some cracks in the foundation I'm seeing. In fact, I laid that out very well, very methodically in the progression of events in the recent letter. We're seeing short-term rates are slipping, and I sent you some charts showing a couple of things, but as short-term rates are slipping and we're seeing, or I say we, I don't think hardly anybody is seeing it because, like I said, the mania is certainly alive, but as I'm seeing some of the cracks in the foundations, the short-term rates are sliding. We talked about the importance of that. And then in response to those short-term rates, remember we've been talking about it ever since this started, saying that these reverse repo operations were, in effect a method or of holding short-term rates. Well, as the short-term rates are sliding, we're seeing the chart, which I sent you, of those reverse repo operations going what looks like just a parabolic move. They're just escalating. But, the cattle remain calm.
You've sent me some charts about the repo markets. What do they tell you? Well,
they just show that it's taking an increasingly, if you look at it, it just simply, it's like a parabola. It's just going just up. And I don't know if you can post those charts or make them available. If you can, by all means use them. But it just shows the ramping up of the efforts. And what it tells me, I only know how to read it one way at face value, and that is simply that, like I said, it was a tool to hold rates, put a floor under rates, and then as rates have begun to slip and the cracks in the foundation have begun to be seen, then it's taking more and more and more and more effort to hold things. And so while everything appears fine, we had the 5% decline, like I said, but we're seeing, if you look at it, stand back a little bit and look at the big picture, we're seeing all these efforts right here in the wake of this 5% decline, or this latest escalation, I guess I should say, of these reverse repos. So I think it's a direct effort to try to hold things together.
We have the Evergrande financial crisis in China. Apparently, they've met their latest interest payment, and the Chinese government is urging them to pay their bondholders, especially those from the U.S. So as much as we're dependent on China, they're dependent on us. But is Evergrande kind of the canary in the coal mine, the world's second largest real estate company in really deep trouble?
I think it is probably one of the many canaries in the coal mine. There's something is going on when you see the escalation of like I said, of the reverse repo operations to hold rates. Something's wrong. In fact, I think rates are, in general, short-term rates are going to go lower because over the weekend, I was just curious, and I started looking at, I don't have a list in front of me or anything, but I should have made one, didn't think about it. But I started looking at short-term rates, well, it's all rates, short, medium, long-term rates across, the whole spectrum of different countries. And, I can't name any of them, but there are a lot of countries where short-term rates, not just short-term rates, but short, medium, and some of the longer-term rates are actually negative. And so I think the pressure is definitely on rates, exactly what I've said, and like I said, not to beat the dead horse, but that's what they're trying to do is hold this. It's about trying to hold things together as best they can and manage, this bubble environment that we're in. And yes, I think that's one of many canaries in the coal mine.
Negative rates, is that an effort to make holding cash useless?
Well, no, I think from my eyes, it is a reflection of the deflationary forces that are trying to take hold. We've talked about that. I know that, as you mentioned, because of all of the shortages and supply chain interruptions and that sort of thing, absolutely we've seen, escalating commodity prices, which is obviously inflationary. I mean, like I said, one trip to the grocery store, you see it. You look at housing prices, you look at the stock market, all that is inflationary. But beneath the surface, these rates are telling us it's the deflationary forces that they're trying to fight. And that's what's going on. It's a battle to fight those deflationary forces from taking hold. If they ever do, then I think that's when the bubbles burst.
Now, the Bank of England and the Fed, again, hinting that the interest rate holiday may soon be over. And when I say soon, within a year or two, is that enough warning for people? Stop expecting to have low interest rates forever.
I don't think they are. I think that's jawboning as I see it. I don't take that serious because I think it's just an effort to try to talk more inflation into the market and hold these rates. It's a tool, but the pressure that I see on short-term rates, there's no threat of them raising rates. Mm-hmm. So I think that is just another tool to try to convince the marketplace, a jawboning tool. It's that simple.
Is this, I know the government puts a lot of pressure on these central bankers. Do they want to give the illusion that if the market continues to be, if not rising, at least remaining steady, that means the economy is doing well?
Of course. That's their job, in part is to try to, to manage, like I said, the economy, confidence, et cetera, and they've done a magnificent job. I'd hate to be in their shoes. They've done a magnificent job with it, but it's a high wire act, and now they're battling the situation with the recovering economy, with the stock market bubble, and continued pressure on rates. So it's a razor's edge for them, but so far they've managed it very, very well.
We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, energy seems to be doing quite well beyond its usual seasonal effort. Is that because of the oil refineries shutting down around the Gulf Coast, and also the energy crisis in Europe where their wind farms have become becalmed and they're having to use coal and natural gas to keep the lights on?
Probably has something to do with both. Cyclically, you're right. From a timing perspective, there's somewhat of a seasonality to energy prices. Looking at it from a longer term seasonal perspective, they've been trying to top the energy sector. I mean, some of the sectors, energy related sectors, they still look like they potentially have topped to me. And so what we may be seeing, is just like with stocks, I think what is, everything is trying to push into a cyclical juncture to turn for some degree of correction. And it's just not quite taken hold. I do think that the energy sector is in a position where it's trying to make some sort of at least intermediate term correction, but it's just like equities, it's hanging in there. The process is certainly not over.
The U.S. dollar, how's it doing, and what are its prospects?
I like the U.S. dollar. It's weaker today. I think, we have a short-term top in place. In my world, there's an intermediate degree low coming due. But longer term, the dollar looks great. We had longer-term cycles in the dollar. I know that's contrary to what, popular belief, but, the long-term cycles being in place, I think that the weakness we see here, particularly today, and then, like I said, there's an intermediate degree top due, so we should have some weakness going into that degree low, but I think that's counter trend, and overall, at this point, the dollar still looks good to me.
What's going on with gold?
Pretty much the opposite. We had an intermediate degree low. We've had a bounce, of a couple of degrees, short and intermediate degree bounce. And now that's trying to roll over. And then I think gold is, we've seen the higher degree tops, 9-year cycle top, et cetera. And so I think that the recent bounce has been counter trend, and gold's going to be under pressure. And that's another sign, I believe, of the deflationary forces. Gold's under pressure, short-term interest rates are under pressure, and like you said, the coming out with the Fed meeting and trying to say that you're going to raise rates, that has inflationary tones, and so all of that is managerial talk, if you will, to try to underpin, conditions with some, inflationary talk. It's jawboning to try to hold things together.
Mm-hmm. Tim, how would you sum up what's going on with the markets right now, and are there any lessons or warnings or risks to be taken note of?
It's an absolute razor's edge. Like I said, I would hate to be in their shoes trying to manage it. There's no question. We've talked about it, and I don't know if you can post the chart that I sent on the bubble. It said what bubble? But, there's, the bull market, the advance out of the 2009 and then 15 lows, it turned into, we knew it was a bubble then, and then, the bubble turned into a mania, and I don't know what you call it now. I would equate this to the absolute, most insane asset bubble in history. But they're doing everything they can to control it. And I get that. And until they either lose control or something happens that's out of their control, they're done a hell of a job at holding it. And it just, people are calm. They think it's a new norm. This is no new norm. I know that's the same old thing, but it is what it is. And, it's literally a razor's edge here. And one slip, and when everything's fine, then the bubble bursts, kind of like the Hindenburg. Everything was fine. Next thing is up in flames. And so I think understanding, I laid it out in the latest research letter. The best tool that I think we have is understanding the structure, because at the end of the day, as they say, nothing else matters. We have to have that structure, and if we ever get structure that sticks, we'll see it. And then we'll know, hey, we've got to turn, just like we did in 2020 and at all the other major turns. The thing is that it'll try to set up, and then, they'll be able to kick the can down the road, as they say, keep it going, and they can continue that until they can't. And whenever that day comes, I guess, it should appear in the charts.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, we'll ask that question for you the next time we talk to them. If you send that question to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.